Welcome to the Universal Accounting Center's accounting course with your accounting instructor, Alan Bostrom. Session 2, Practical Application in the Retail Industry. In this session, you'll go through an entire monthly bookkeeping cycle as you manage a complete set of books for Berries, Gas, and Groceries. You'll do everything from making the journal entries to posting to the general ledger. You'll produce the financial statements, including the balance sheet and the income statement. To begin this session, turn to page 2.9. And now, here's your accounting instructor, Alan Bostrom.
Now, today we're going to work with a new set of books, Berries, Gas, and Groceries. And this is found in Chapter 2 of your book. What I'd like to do is start by showing you the chart of accounts in Berries, Gas, and Groceries, found on page 2.9. This is usually where we start. We want to establish the framework of our business. And so we're looking at the chart of accounts to understand what type of information we're going to keep track of. Berries, Gas, and Groceries, for your information, is just like this normal convenience store that we use probably on a weekly basis. It's got gas pumps out in front. It's got groceries and hard goods in the grocery part of the business or in the store part of the business. And then something that it's got that most convenience stores don't is it's got repair bays out and back. Okay, so it actually does car repair work at the same time. And we want to account for those three separately so that we can determine how much our sales were in each of those three areas and what our costs were in each of those three areas so that we can find out where our gross profit is coming from. Okay? So if we look at the chart of accounts, let's start by looking at the current assets on the left-hand side. We have the bank account and accounts receivable. Very simple business. The accounts receivable does not pertain to that. We don't allow people to charge on our account for their gas or grocery sales, but we do have some customers that have us repair their cars on a regular basis, and so we do permit them to charge their repairs and pay us on 30-day terms. So that's the reason for having an accounts receivable. Were it not for that car repair shop back and back, there would be no need for accounts receivable, and this company would be even that much easier to work with. Okay? Now there's three inventory accounts. Three inventory categories. These inventories are separate and identifiable. We have a grocery inventory. That's all those groceries in the store. They're all located. Everything that we're going to sell inside that store is in our groceries inventory. So it's very easy to separate that out. Then we have also gas tanks. Tanks to hold the gas. Obviously, the gasoline inventory is very easy to keep separate from the groceries. And then back in the repair shop, we've got a little parts room in there that contains different fan belt sizes and oil filters and the standard type of maintenance and repair things that we need. If we've got a specific job that needs a starter motor or some other specific part, then we order that from one of the parts houses close by. Okay, so that's how our business works. But we want to have those different size fan belts and things there available so we can quickly fix and repair small problems. Underneath that, we have property, plant, and equipment. There's two categories of property, plant, and equipment. One is furniture and fixtures, and the other is machinery. And notice that we have accumulated depreciation mixed in with those. Now, are those debit or credit accounts, those accumulated depreciation accounts? Credit. So since they're in the asset section and they're credit balance accounts, what do we refer to them as? Contra asset accounts. Okay. Okay, down under the liabilities. We have current liabilities. We've got accounts payable, which is fairly common. But we also collect sales tax on our groceries and other parts. And so we're going to have that account. We're going to have FICA, federal, and state, indicating that we have employees. Okay. And then under the capital, we've got invested capital. Let's look over at the sales and cost of sales. There are three sales accounts. We're going to keep track of our gasoline sales so that we can see what's happening in that area of our business. We're going to have grocery sales, and we're also going to have parts and labor sales, or parts and service sales down there. In each case, we're going to carry the cost of the part in the 600, 610, or 650 account. Then all of our expenses are 700 series. You can see or have an idea there what the expenses are. Any questions about the chart of accounts? Okay, yes.
No drawing account, is that not always necessary?
Well, in this particular case, we're certainly going to have to add it. If Barry plans on taking any money out of this business for personal purposes, we're going to have to add it. It's just we're not going to use it in the first month. We are working with Barry's Gas and Groceries in the first month of their operation. Okay? And maybe Barry, Kathy's question was, what about the drawing account? Well, Barry maybe this month isn't planning on using it. I know it's not built into the practice set, so we didn't put it in there. But next month, when he starts taking out money, of course, we're going to need that account that time.